Good morning. It is Tuesday, June 20th, 7 a.m. New York time. I've got something going on here with my audio I need to figure out. Hey, Beeswax. Give me just 1 second here. I'm having this massive delay inside my headset. So it's like, yeah, I'm not sure what's going on. I may have to just take this off. I don't even know if I really need these. If I really need these headphones anyway, I may have to just do without them today. Because that's really annoying. It's like I'm hearing myself talk, and then usually it's just like I'm listening and I can monitor everything that's going on. But now I'm like, there's like a 8 or 9 second delay. I could talk, and then I'm hearing myself, and I can't have a conversation while I'm listening to myself at the same time. So apologize for that. Welcome in. 10K to $2 million funding challenge. And we are in week 2 of trading both our live $10,000 funded account, which we started trading a month ago. We passed phase 1 and phase 2. We got funded. We got to our profit split and payout. And we were able to purchase a new $10,000 phase 1 challenge. And we are now trading both of those via a copy trader. And we're up 2%. So this is week 2. We've only taken 2 trades this is now day 7 of trading, 7 trading days. So we're into our second week of trading, 5 trading days in Monday through Friday. So this is our 7th day of trading, and we're up 2% on phase 1 and our funded account. So if you're new to us, welcome in. Please click that like button if you find any value. Drop in the chat, say hi. Let me know you're here. Corey, good morning. But we're here every day, streaming live, showing how you can take just one setup. It's all you need, one setup. I trade multiple setups on other accounts, but on this stream, I'm showing you how you can take one trading setup and use it to pass challenges with good risk management and stack accounts. And our goal is to get to $2 million in funding by the end of this year. Now we're using Bespoke Funding, prop firm. Bespoke Funding Program is the prop firm. There is a link, I think, in my bio for them, but you can Google them, Bespoke Funding. They offer $2 million in maximum allocation that you can get in purchased accounts. Most others are 300K, 600K. There's more and more that are going up to $1 million, but they're currently the only firm that I know of. I think they were the first firm to introduce no time limits on these challenges. They're not quite a year old yet. They are new, but they are quickly growing. They are very well managed and run, great customer support. They're consistently giving great payouts. So anyway, that's who we're using. I'm not affiliated with them. I'm not sponsored by them. I have nothing to do with them other than I've just chosen them because they offered $2 million in maximum allocation. And so that's why we're going with Bespoke. Anyway, that's where we're at. Hope you guys are having a good day wherever you're at. Good afternoon to those over in the UK and Europe, and good evening to our viewers from Asia. Glad you guys are here. Hope that you've had a great day. And for all you stateside, good morning. And I hope that this is one of the best days of your life, because every day is a gift. Every day is something we are to be grateful for the breath in our lungs, and for the sun in the sky, man. It's beautiful to be alive, even with all the junk going on in the world. with all the stuff that it's easy to get depressed about and angry about. We have life. We have life, and we have relationships. We have community, and that is definitely something to be grateful for. And we have a future, man. We have a future. This business, I think, is one of the reasons why most people are doing this business, is because of the future potential that it has, and to change their life and to change their family, to be that generational turning point for their family's history. And so I know it was for me, but that's why I'm here. I'm here to help. I'm tired. I wish I would have had someone every day sitting at the charts showing me not just the strategy, because that's really not why I'm trying to do this stream, is not to teach a specific strategy. It's really to model what it looks like when a trader sits down, a professional trader who's consistently profitable, receiving payouts, living off of their funds. Like, what does that person do when they come to the charts every day? How do they act? What do they see? How do they talk to themselves? How do they manage their trading plan? What do they do when they are in drawdown? Like, I am here every single day talking you through this, showing you, modeling for you. Do what I do. I'm not perfect by any stretch. I take losses. Every professional trader takes a loss, but I'm here every day showing you exactly how to manage your business, because this is a business. You have to treat it like a business. So, good morning, everyone. Jack, David, welcome in, guys. Glad you guys are back with us. It's good to see you in here. Just realized I'm wearing a yellow shirt that doesn't match the yellow on the background, so that might be a little harsh on the eyes today. I apologize for that. I just wear whatever my hand grabs from the closet, so is what it is. Yesterday was kind of a boring day in the markets. It was a national holiday here in the States, bank holiday for a couple different countries, and so it just nothing really happened. Nothing really happened. It was a teeny tiny range, just a lot of chop. And so you can see here on Eurodollar, we are, let me get up here. We're inside this weekly fair value gap right now. We have reached up into it last week. Last week's high is not been taken. Last week's low has not been taken. We're just kind of meandering around currently inside this weekly fair value gap. And, we're waiting to see where price wants to go. We've identified the higher draw. We last couple of weeks we've put in a swing low, a higher low, and that means our attention turns to our buy side liquidity draw, which is these relative equal highs up here, this swing high, into this weekly volume imbalance here as well. Good morning, Alex. Welcome in. So we are still a little bullish overall, but however, you can see after last week's big explosive candle to the upside with all of that red folder news, it's left behind quite a bit of buy side imbalance here. It's really offered nothing but buy side on Thursday last week in particular. So I wouldn't be shocked if you see a little bit of a pullback here either today or tomorrow, and then maybe get your expansion on Wednesday, Thursday this week back to the upside. But you would anticipate it did reach down. So here's Friday's low. Here's Wednesday's high. In between there is what's called the fair value gap, which is just another way of saying price was inefficient in delivery here. And so price wants to be efficient. It wants to provide efficiency. And to do that, it needs to come back down and provide an opportunity for sellers to be involved in that market. Pick up anybody that wants to be long This is a liquidity void, basically. It's another way of thinking of that. Price is going to want to come down and typically get into that. It did yesterday. It did tap into that. So it doesn't necessarily need to fill in the whole thing. I would be interested to see what happens here. You can see a breaker on the weekly candle here. So you have this up close candle that then runs buy or sell side liquidity going down, and then we've had displacement away from that area. So you have a fair value gap inside of that weekly, daily breaker candle here. So potentially down into at least this area, somewhere in here, you could look for a short-term bearishness potentially. I'm really just going to kind of wait and watch and see where the displacement happens for the market to give me a clue about how it wants to respond and act. But that's kind of where we're anticipating. Excuse me. I'm gonna take these lines off and just kind of clean up our chart here. We had reached all of our higher time frame objectives on this move down, and so now this was the higher time objective that we identified last week. Of an area that we would be interested to see what happens when price gets to it. But you have that weekly fair value gap here, which is also an OTE level of this leg down. So if we fail to put in a new high, you can see we didn't displace above this old high here. This old high was run multiple weeks, but we never had a body closure above that swing high right there. And oftentimes that is a sign of, of a reversal. So it pulled back away. It failed to make a new low. And you've been in an uptrend. So you would anticipate these highs being run and displaced through. But we'll have to wait and see. We do have some news, I think this morning. Building permits come in at 8:30. This is a red folder news event that I will trade through, so I don't mind being in a position before the building permits news drops. Let me check and make sure there's nothing else. Oh, I know why that was now. I think I figured out what's going on with my headphones. All right, next 7 days. Let's see. Let me pull this up here so we can look at this together. If I can get that down. Here we go. We've got some medium news. Canada's got some medium news, and then we've got what's today? What's today? Building permits. That's it. So today, I'm not too concerned about this as being a highly volatile news-making event. In the past, it has not been for my data, and so it is I'm not going to be scared of this. I guess I'm not going to stay out of a position until that comes in. Tomorrow, we have Fed Chair Powell is speaking at 10 a.m. These are my time. I'm in the Houston area, so that's Central Standard Time here in the States, so it's an hour behind New York. But it'll be 10 o'clock New York time. We'll get Jerome Powell will be giving some testimony. And then later, Thursday, I don't think we have much. Thursday, flash PMI could be something to keep an eye on. Yeah, so I think that's It looks like all there is coming up. Oh, continuing jobless claims is Wednesday morning as well. That initial jobless claims that could be a mover, even though it's not red folder news. With just the current culture of the economy and everyone's so uh, uh, attuned to all the data that's coming out for specifically jobless claims, unemployment numbers, CPI, all that kind of stuff. So these might be some movers tomorrow morning. We'll see about that, but I think we're in the clear today. We're just going to trade price action, and we're going to make sure that we try to only take our high probability setups. So, hey, Steven, welcome in, buddy. Anybody get into any trades through the London session on anything? We'd love to hear how that's gone for you. You can see, let's look and see if we can see anything. So you had the Asian session high yesterday's high up here. It came in at this number right here. Watch this number, 109,459. And then the London session high was 09458. So a pipette away. A pipette away from yesterday's high, Asian high yesterday. So we haven't taken that out yet. We came right up to it. So those are relative equal highs, which is a buy-side liquidity area of interest. We will want to see what happens when price reaches into that. You can see down here was yesterday morning's low right before the New York session. We pulled back up and we just chopped all day. And then we had our Asian session here. London came in, did not take out the Asian low, rallied back up, taking out buy-side liquidity here. Did not take out yesterday's high, which is interesting. And so we're just kind of in this inside yesterday's range, really. Here's yesterday's high and low, and we're still trading inside of that. We haven't taken either side. So I'd be most interested this morning to see what, if anything, what liquidity gets run, and then do we get displacement away from that? So that's what we'll be watching and waiting for. Technically, you did get a run on all this buy-side liquidity here through the London session. You just didn't get your drop down. You didn't get liquidity taken on the sell side during London here. If you drop down to the 5-minute, was there anything? Maybe. I would have really wanted to see this get run, but technically he had a move down, displacement up. You potentially could have used this candle here. This up close candle caused a pretty aggressive move back down. It didn't take out the full sell side liquidity, but it did rebalance these areas here and take out liquidity on this side over here. And then it displaced away above that. And you can see right here, you've got this is the last. We'll just mark this out so you can see. Here's your breaker. Right there. You have your fair value gap nested inside. You have one a little bit underneath that breaker as well. But you could have targeted 50% of that breaker here with your stop below the candle of the last fair value that made the last fair value gap. That would have given you a 6 pip stop, and you could have gotten your 1 to 2 pretty quickly shortly after that. So there was a setup there on the 5-minute time frame. It wasn't the cleanest setup. I would have wanted to see this liquidity get run, but that is a breaker with a fair value gap nested inside. You did run some liquidity, repriced some areas here, and then displaced away. And it did work out. I would not have taken that trade. That's not a super A+ clean setup for me, but it's there. Likewise, you also have these up close candles ran this old low and then displaced through fair value gaps inside of here. It's traded back down to about 50% of those 3 candles right in here somewhere. And now it's just meandering around. There's really nothing going on euro dollar right now that I would have any interest in. I'm going to need to see some liquidity get run on these swing highs, or the old yesterday's high or yesterday's low, and then see if we get some displacement away from that. So with such a massive big candle we had last week, do we get another big massive candle this week? Don't know. I don't need it to. I'm just trying to get in flow with what the market is trying to do. Hey, Maverick says, hello, brother. Hope you're well. Took a big losing trade yesterday on gold. Left it running without the stop loss. Not going to make that mistake again. Placed in a rush. Feeling sad. Maverick, buddy. Man, you make promises to yourself. And then you go in and you break those promises. And you just reinforce to yourself that you can't even trust yourself when you do that. It's like, it's like if there's a fire pit in front of you and there's, you stick your hand down in the fire, it's going to burn you. The market is like a roaring fire. You cannot tame it. And you stick your hand in there without protection, you're going to get burned. And you know this. You know this, man. You've got what it takes to be a professional trader. But you continue to ignore the things that professional traders do every time they take a trade. You can't do that. You're shooting yourself in the foot every time you break your rules. Every time you fail to execute your trading plan, you are shooting yourself in the foot. You are handicapping your ability to do what you most want to do. What you most want to do is become a profitable trader. And every time you break your rules, and this isn't just for Maverick, all of us do this. This is for everyone. I'm preaching to myself. I can't remember the last time I broke a rule, but I probably will again at some point. You're shooting yourself in your foot. You cannot operate like that. You can't execute your business like that. You're running a business, and your business is not going to survive if you don't follow your business plan. You have a business plan for a reason. Follow it. Follow it, follow it, follow it. Alex says, I took a long on GBP but got stopped out. We'll take a look at GBP here in a second. Steven, just want to say something based on what I learned from ICT. Feel free to correct me. Absolutely, man. We're all here to learn together. I don't make any claims to have the Holy Grail. I don't make any claims to perfectly understand all of ICT's concepts. I have watched pretty much everything he has put out, except in the last 3 months. I have not, mostly because if you try to take everything that ICT teaches, and try to incorporate it into your trading plan, especially as a newer trader or someone who's just trying to pass a challenge, you're going to be extremely frustrated because there's so much information and so many moving parts and so many dots to connect and so much vocabulary to learn and ideas to kind of absorb. It can become completely overwhelming. And the dude's brilliant. Like he knows how it all works. As he says, he's the ghost in the machine. He understands why things are going, and he can move from one concept or idea to a different concept or idea basically instantaneously. I cannot, but I have found a few of his concepts that make a lot of sense to me and that I click with, and I have figured out how to use them and build a trading system around them that is profitable for me. So I make no claims to perfectly understand everything IC teaches, even probably with this system that I use, the breaker system I use here is probably not even exactly the way he would say that's not how I teach that. And it may be, but it's what I learned from him that has helped me build this trading system off of his idea. Now, maybe it is exactly what he teaches. I don't know. Maybe one day he'll pop in the stream and chastise me for not doing it the right way, or congratulate me for figuring it out. So would love to see him in here. But Steven says, let me see. 15-minute candles from 4:15 till 4:45. It is a no pass zone for me because it's up and down, up and down. So the wall is painted. Good. SI, the 5:15 15-minute candle becomes an order block, so I expect the price to be rejected from there. What do you think on pound dollar? Let me take a look. Maverick, thank you. Yes, you're right. Just got a lot of work to do in regards to my emotions. Need to keep these promises to myself. We all have to keep the promises to ourselves, Maverick. We all have emotional issues that we're dealing with, bro. Like fear and greed, fear of failure, fear of rejection, fear of judgment, fear of missing out, fear of not getting the things that we so desperately want, impatience, anger, depression, self-worth, self-confidence. There's so much that goes into, and it's all built around this desire to be a trader. You see people make it look easy. It's not easy, but professionals make hard things look easy. So and it's really two things. You're seeing a lot of people that are lucky, and that's the worst thing a new trader can be, is lucky. You do not want to be lucky as a new trader. That just is going to instill so many bad habits. So you see people be lucky, but then you see professional traders making this appear to be easy. It is not easy. It is difficult, very difficult, to consistently be on the right side of the market, especially if you've only been doing this for just a little bit of time. So let's jump over to pound dollar. Let's see what's going on with GBP here. Okay, so GBP, let me get back up here. It's pulling back from last week's large move up into this monthly fair value gap. We've reached 50% of that fair value gap, which ICT calls the consequent encroachment. It's just halfway through a PD array, basically. Could be a wick, could be a fair value gap, could be lots of different things, but it's the consequent encroachment. So you can see it stopped right there, and we've pulled back. Yesterday, we've taken out yesterday's low, whereas on Euro, we did not take out yesterday's low. We have today already on GBP. Let's drop down into our 1 hour time frame here. And so you can see the Asian highs up here, right? So here's your Asian highs, and we did take them out right there at the London 3 o'clock hour. So London opened, dropped down, and then rallied up, took out the Asian highs, and then fell away. All right, let me see if I can break down what Steven's talking about here. Let me see if I can redecipher this. 15-minute candles. 4:15 to 4:45 is a no pass zone. So it looks like Steven's saying he's not going to take a trade until after that. This 4:15 to 4:45 until these three candles print. Um, 5:15 is this up move candle. You expecting price to be rejected from there? What do you think? I mean, it's a order block. It's a bearish order block. I would have liked to see a fair value gap inside of there. It makes it a little, to me, order blocks that have fair value gaps either in them or right below them typically tend to be a little more powerful, more sensitive to that. But you can see you had a run on liquidity here. It took out these highs, took out that high. This high was 28.057, and it took it out by 3 pips right here. Took out these highs, this Asian high and that swing high. And then it pretty, well, it didn't like, this is not an energetic move. This is an energetic move. This is not an energetic move. So you had London Open at 3 o'clock. You took out sell side and then aggressively pulled away. And if you were going to try to treat that as a breaker, you would have used, this move started up here, so you would have used one of these candles, 50% of that. You would have entered inside that fair value gap probably, and you would have gotten stopped out on that if you were going to go long on GBP off of treating this as a breaker, which isn't necessarily a bad idea. You did get a run on liquidity and displacement away, leaving a fair value gap behind. But it took out those highs. It took out the buy side liquidity before it gave you an entry. So if you were viewing these candles as breaker candles and this fair value gap nested inside of that, you probably would have canceled that order, because once it takes out the buy side, you can expect displacement away from buy side liquidity here. So, and I've said this on the stream many times. When I've put in orders, I will put in an alert, and if price hits that alert before it gives me an entry, I'll cancel that order. And that alert is typically set at the opposing liquidity draw. So if price displaces away from a liquidity grab and gives me a breaker and gives me a fair value gap nested inside that breaker, but it doesn't return to that, and instead it reaches for liquidity on the opposite side, I'll cancel that order. And this would have been the case here. Once it breaches that and takes that liquidity, if you had an order set, you would have canceled it. Since that time, let's see, on the 15-minute time frame, don't really, I mean, that is going to be an order block. That would not be a bad place to look for price to reject off of, but we are currently still taking sell side liquidity here, and you have a lot of imbalances over here from last Thursday. You have some no wick candles, which I'm not sure if ICT teaches no wick candle theory, but they are, price does not like to leave no wicks behind, so it will often gravitate towards those areas, and as a way to rebalance and put in a wick. So at least in my experience, again, I don't know if that's a professional trading concept or not. I don't like have a trading plan built around it. I'm just typically aware of them. Let's see here. So run on liquidity. If you're looking on a 30-minute time frame, this run on liquidity started down here. This is the last down close candle that began that. You could also use this one a little bit lower. No fair value gap there on the 15-minute time frame. No, our 30-minute, no fair value gap here on the 30-minute time frame. So nothing on pound currently for me is looking interesting. Not that if trading straight order blocks is part of your trading system, not a bad place to key in on if price returns there. But you do have relative equal highs up here still. So, we'll just be patient. Just watch and wait. Don't rush anything. There's no reason to get into a trade as soon as you sit down with the charts for the New York session. Like, just let price show you what it wants to do. Alex says I took a long after that sweep and displacement on the 15-minute, but it just kept dropping. Yeah, Alex, I mean, I don't know if you just got in a market order. Did you wait for it to pull back into this fair value gap and treat this as a breaker? I'm not sure what you're trying to do here, but again, once sell side liquidity was taken and then it displaced up to take buy side, I wouldn't have tried to get in long anywhere. That's that's called a seek and destroy market model. It didn't give you an entry before it took that buy side liquidity. So I probably would have stayed out there. You always kind of want to know what is your draw on liquidity. For me, that's kind of one of the very first things I want to do is where is my draw on liquidity? And that's going to help me determine where my entry is going to be, what my targets are going to be. And if that draw on liquidity gets hit before my entry gets tagged, I'm out. I don't want to. It's more likely that now it's going to seek liquidity on the opposite side again, and that means it's going to run right through whatever my entry and stop would have been. Also a breaker there. I saw it on your chart. So a breaker in order black, we don't have a fair value gap. We have an inverted fair value gap. Let me see if I understand what you're talking about. Okay, so this area here is what Steven's talking about right here. This is a fair value gap that you would have wanted to see if price was going to remain bullish. You would have wanted to see price respect it, and it did not. And so when a fair value gap is disrespected on one side and it comes back on the opposite side, it becomes an inverted fair value gap. And so now you could expect it to act as resistance, which you see that it did here, creating a 15-minute bearish order block. So yes, that is an inverted fair value gap, and it did, once it was violated and traded through, it did hold up. And this bearish order block, or this bullish order block that you would have expected to hold price up, was traded through, which becomes a breaker. These two down close candles become your breaker, but there's just no fair value gap inside there for me. A little bit of one in here on the 5-minute. All of these candles together would be your breaker here. So you have this down move that runs buy side liquidity. The only thing here is you just don't see an energetic displacement away. It just kind of meanders. It does break structure here. It does leave a fair value gap inside. Again, it's just not a super clean model for me right now. Like I don't see what I want to see when I want to take an A+ setup. This is not a trophy buck hunt for me. But Alex says, yep, that's my trade, but wrong bias. Well, yeah, I mean, it's not that your bias is wrong. Your bias might be right for the day. This may still go higher, but it wasn't necessarily your bias. Your bias was right, but then your execution of watching what price is telling you is where you, I think, made your misstep. And again, that's once you see your draw on liquidity, these highs get taken, you've got to be nimble and be like, okay, that was where I would be targeting at my entry anyway. That'd be my first target, and it just took that out. So now I should reconsider whether I want to get back in that trade. Maverick, I'm going to go back and go over my trading plan, but maybe this time make one for my emotions. For example, if I'm rushing or outside, don't take the trade. Oh, gosh, yes, absolutely. If you don't have 100% focus, so many times I would be driving or something and be watching the charts and then see what I thought was a setup, and it didn't have my 100% attention. I was just like, oh, yep, I'm getting in there. And then I would put something in, and I'll at the next stoplight, I'll put my stop loss in or something. If you don't have 100% of your energy and time and attention to give to your trading when you're actually wanting to get in, do not try to execute. Your brain can only do so many things at once. And this requires a high level of focus and concentration to be able to make sure everything that you're doing, we're talking about on a 10K account, hundreds of dollars. But when we're talking about a $2 million account, you're talking about tens of thousands of dollars that you're risking per trade. You've got to stop and pause, and you've got to start treating these small 10K challenges like they're $2 million, because they will be one day. And if you can't manage and treat this 10K account with the same diligence and seriousness that's going to be required with your $2 million account, you're never going to get close to having a $2 million account. So yeah, definitely have part of your trading plan is I'm not going to trade if I cannot give 100% of my undivided attention to this setup. So yeah. See you, Steve. Happy wife, happy life. You got it, bro. Paolo, what do you want me to do? You said, bro, do something. I'm not sure, Paolo, what you are referring to. If you're saying, bro, do something to me, as in you want me to take a trade or something, I've been trading these funded accounts for now. This is day 7, both of these accounts, and we've taken 2 trades. I do not trade every day. I do not take a trade every day. I wait for my A+ setups to form. So I'm not sure if you're or if you're talking to someone else in the stream. I'm not sure, buddy. You'll have to be a little bit more clear there. But if this is your first time watching, we do not trade every day. The setup doesn't form every day. And I'm not just here to be a gambler and be in the market. I'm not just here to push a button and try to find something or make something happen. I'm going to wait until my setup forms, and then I'm going to strike, and then I'm going to get paid. And that's how professional traders act. So, but I'm not sure if you're talking about me or someone else. Hey, Marcel, welcome in. Glad you're here watching. Paolo, also glad you're here. But just let me know in the comments. Not sure if you're referring to Maverick and asking him to do something, like you feel bad for him because he made a mistake. Trailing max drawdown. No, Bespoke, I think for their 1-step challenge, it's trailing max drawdown. But for their 2-step classic challenge, it is not trailing max drawdown that I'm aware of. Let me go back and look at their... It's balance-based drawdown. The max loss is 10%. The daily loss is balance-based. But let me go look at their FAQs. 2-step classic challenge. Daily loss limit is calculated based on the previous day's end-of-day balance, that's typical. That's a pretty much standard in the prop firm industry. Overall max drawdown. The maximum drawdown is the maximum your account can draw down before you would hard breach your account. When you open the account, your max drawdown is set at 10% of your starting balance. This will be static for the duration of the account. So on their two-step, which is what I'm trading right now, it's static. So it stays at 10% of your starting balance. So if you're 10% in profit, then you have 20% maximum drawdown. But on their I believe their one step is trailing. Most prop firms' one step challenges are trailing drawdowns, which is why I do not do one step. I only do two step. Classic. I want static. I want that drawdown to stay static where it's at. So right there, that's it. It's very nice to watch what you're doing. Well, thanks, Marcel. I appreciate that. I'm doing a classic. I'm not doing rapid. I appreciate you watching, and I hope that it's helpful. If this is boring to you, then you're probably likely not a professional trader. Professional traders have a plan of attack. They're not taking multiple positions a day. There might be some professional scalpers out there. We are not professional scalpers. If you're watching the stream, you're not a professional scalper. If you're trying to pass challenges and failing, you're not a professional scalper. Prop firms have the data that shows the majority, the very large majority of people and traders that are getting payouts, consistently reaching payouts, and those traders are also getting the largest amount of the payouts that are getting paid out are those traders that are trading 10 to 15 trades a month. So they're taking 2 to 3 trades a week. Some are even fewer than that. That's because they're waiting, they're hunting, they're trophy buck hunters. They're not out here trying to take down squirrels and rabbits. They just wait and they're patient. They strike when their setup appears, and they don't do anything else before then. Let's jump over to the dollar. We haven't looked at the dollar yet today, but it's going to be basically opposite of everything that we've seen on euro and pound so far. So on our weekly, sorry. This fair value gap left over from Friday's high and Wednesday's low. This big down candle on Thursday left a fair value gap. We've traded back up into it. We reached up into it overnight, and then we've now rejected back down off of this. You also have this fair value gap and this order block here, which is a breaker because you've had a down move that took out buy side, and we've displaced back through it with a fair value gap inside of that. So this is a weekly breaker with a fair value gap nested inside of that weekly breaker, which we're also inside of. That could likely push the dollar lower into the volume imbalance we hit last week and further below the fair value gap nested just above this daily order block down here. Again, we have our relative equal lows down here on the daily time frame inside of this monthly fair value gap that we have dug into a couple times, but not hit even the consequent encroachment, the 50% value of that. So if price does want to run these relative equal highs up here on the daily time frame, very likely it would want to run sell side, pick up orders so that it could turn around and run buy side. And so that's why I'm a little bit bearish on the dollar still currently. It could push up a little bit higher. Doesn't have to. It could maybe retest that fair value gap, see if that becomes an inverted fair value gap. But currently, it's just yesterday was, again, holiday, so not a lot of good price action there, but it did drift up and close slightly bullish. And then as the market opened, it's wicked up, wicked down, and it's kind of hovering around its open right now. Hourly time frame, you can see we've taken out sell side liquidity here, and we've pushed back up. And so now we're going to wait and watch. Does it want to push higher, take out more buy side, maybe fill in some more of this imbalance up here? Does it want to reach up into this daily inverted fair value gap here? This is the current daily fair value gap we're inside of right here. So again, we're watching, waiting. We were looking for the clues to see where it wants to displace to, and then see if we can take advantage. Find us some low, easy hanging fruit. I guess Paulo did not answer. I don't know what Paulo was talking about. But Paulo, feel free, man. I'm glad you're in the chat. I'm glad you're here participating, but I'm not quite sure what your thinking face means or bruh do something. I'm not quite there. Just looking at my Twitter feed, there's a couple people who left me some messages. All right. Coming into the 8 o'clock hour here with our New York session. Let's take a look at gold before the hour flips over here. You can see we've got our daily breaker up here with our fair value gap nested inside. This has held down. Also, we have a 30-minute fair value gap that has created a massive amount. This 30-minute fair value gap right here has created a massive amount of resistance for the market, holding it down over and over again. Has yet to break through that and close above it. And you can see on the weekly time frame, we reached our draw on liquidity last week and pulled back up off of it pretty aggressively. So the question becomes, where's your next draw on liquidity? So you have this large fair value gap and you have this volume imbalance. We've tapped into that fair value gap and then pulled back away from it. You have a weekly fair value gap on the buy side up here that correlates with this new order block. So potentially you could see a reversal up into that daily breaker, which aligns with this weekly fair value gap there. But you can see for the last couple of weeks, we are very choppy and very sideways. So, you know, it's engineered liquidity above that 30-minute fair value gap, and there's a lot of relative equal highs on the daily time frame inside that breaker as well. So buy side could be a target now that we've taken out the sell side, but we will watch and wait again. Just it needs to do something besides this whippy seek and destroy profile that it's currently in. So not too interested in doing anything with gold at the moment. US 30. Last week we had a close above the swing high, and we reached above the buy side liquidity that was put in back in February, that swing high, and then we pulled back. It's left behind. Currently, there's a little bit of an imbalance here, small volume imbalance on the weekly here on US 30, and you still have buy side targets in your sights up there. So bearish dollar profile you would anticipate some movement up. But again, it's not moving, it's not trending like the Forex pairs are. And so they're just easier to trade and to see. Coming back down into this daily order block right here. So wick to the body is where I look to see price react off of. Pulled back yesterday, came down to the body, pulled back off of that currently today. Will be interesting to see what happens with the markets over the next couple days here. Could potentially get a setup on US 30, but we'll watch and wait. You can see the large imbalances here left behind from last Thursday. We've reached down into them just barely. London did overnight, and has pulled back since. So just waiting. All right. here we are, coming into the 8 o'clock hour. And there's just a whole lot of more nothing going on. But we're going to watch and wait and see what happens. So if there's something you want me to look at, another chart you want me to pull up, if you have a question about the strategy, your trading plan, put it in the charts. I'm happy to discuss with you. And you can also just DM me on Twitter if you'd rather not put it in the chart. I'm happy to respond over there as well, more privately, if that would be your preference. All right. I'm working on a video, my first video that's not a live stream, where I'm just breaking down the process of this 10K to $2 million funding challenge, like how I'm actually going to go about doing and reaching $2 million, and how to stack accounts and use trade copiers. Anyway, I'm breaking it all down. I'm almost done with it. I'm not a professional video maker, so it has taken me a lot longer than I thought it would. I've had a couple people be like, man, you should do a video every week or a couple videos every week. And I'm like, if it takes as long as it's taken me to do this one, some of it's that I'm a perfectionist and I like things to be, I guess, higher quality, or at least I have a level of excellence in my head that I would want it to be at. And so I'm probably overthinking it a little bit, but that is kind of that's how I approach anything I do. I want it to be good. So I've never done, it's going to be like a 15-minute video just talking through the 10K to $2 million funding challenge. And if everything went perfectly well and everything went according to plan, how long it would take you to get there, and what the payouts would look like, and how the copy trader works, and any and all of that. So I'm putting all that together. Maybe I'll finish it tonight and get it posted at some point. But so far, it's just been live streams and shorts. And I'm just wondering if I'm interested to try a couple of videos and see if that would be helpful for people. Because I know not everybody can come and sit on the live stream, and not everybody wants to go back and watch a 2-hour live stream session just for fun. Especially when, not a ton of stuff is happening as far as actually calling trades, taking trades, and seeing profits. So we may not take another trade today. It's Tuesday. We may not take her to Wednesday. And then we might get 2 setups on Thursday and Friday and pass phase 1 of our challenge. So the first phase 1 10K we passed in 7 trading days. We passed phase 1 in 7 trading days. And today is day 7. And we can't pass today because the most we would be able to be at by the end of today would be 6%. I risk 2% per trade. If I get a winner, I win 4%. We're at 2% now. So the best I could do after day 7 this time would be 6%. And then we would just need a 0.5 R winner to get us over. No, we would need a 1-to-1. We would need a 1 R winner to get us over phase 1. All right. We are now into the 8 o'clock hour. The last hourly candle has closed right inside the middle of yesterday's range still. This is our current dealing range as far as on a lower time frame. We haven't taken out that high. We haven't taken out that low. Pound closed bearish. And so we'll be in dollar closed bullish. Sorry. Nope. Yep, it did. Just not a lot happening. Maybe the market wants to wait until the news hits. The building permit news perhaps could be a mover and a shaker. I don't. It typically has not been in the past, but maybe it will today. I tweeted at ICT this morning and told him he's more than welcome to come into my stream anytime. Evidently, he had popped into some random dude's stream and got blocked after he commented in his stream. I will never block ICT. Anybody that can get ICT to show up in this live stream, I might just buy you a challenge. That would be pretty freaking cool. I don't have like hero worship, you know. I don't get like starry-eyed about like being around celebrities or anything, or important people, famous people, whatever you want to call them. They're just people. But I do hold a high appreciation for him. It was really watching going through his 2022 mentorship all of last year that really was the game changer for me. It just, things started clicking and light bulbs started going off. And maybe it was a culmination of I had already spent 3.5 years of going through all the failures and the learning process, and now I was ready. I was ready for it, maybe. And that was just the thing that kind of put me over the top. Had I found that when I first started, I probably wouldn't have had the success I have now. But I do appreciate everything he's done for the trading community. And I know he's a pretty polarizing figure in the day trading world. He likes to push people's buttons. And he is a vicious and jealous protector of his intellectual property, which is understandable. But I'm extremely grateful. I guess I should say I'm extremely grateful for the way that he has given of himself and his concepts and ideas freely out there. People are still failing, so it's not knowledge. It's not having enough knowledge. It's not having the right strategy. It's not understanding enough concepts that's going to put you over the top. All of his stuff is available, has been for a year and a half now. And people still cannot use his stuff consistently. And it's not because it's his stuff. It's because of what's happening up here in their head is really ultimately the biggest problem. Biggest problem for all of that. All right. Let's see. How long can I stay on today? It is at least another hour, I think. Let me check my morning schedule here. Yeah, I can stay on at least until the 9 o'clock hour. So we'll stay on at least for another good hour here. See if anything decides to pop up. Has anybody watched the he put up a 6-hour workshop video, a live streaming workshop video, posted it. Was that Friday or Saturday? I can't remember. Someone in here yesterday, I think, said that they learned a lot, that they were watching it and they've learned a lot from it already. I haven't dug into it yet. And part of it is not that I don't want to learn, but part of it is that I know what my profitable trading plan is now. And so the more I go and watch new content or new ideas, there's a part of me that's like, well, until your system stops working the way it's intended to or historically has, let's just roll with it. And you introduce new variables into that, uh, you're increasing a point of failure. And I want to have the fewest point of failures in my trading plan that I can have. So here's kind of what we're watching. Your next payout this Sunday, right? Yep, correct. I'm kind of watching this buy side liquidity here, and there's some sell side liquidity down here, relative equal lows, and then the swing low down here. Also, you have a lot of inefficient price action. You got a no wick candle here on the 1 hour. So I'm interested to see, does price want to grab this buy side and then displace lower towards some of these inefficient areas down here? ICT's older stuff. Hey, Toxie Woxy. Thanks for popping in the chat and for watching. I don't think I've seen you in the chat before, but glad you're here. ICT's older stuff is amazing. New Stuff 2023 is basically rebranding and sometime overcomplicated. Knowing less is oftentimes more effective and prevents analysis paralysis. Amen, brother. You're right on. Yeah, his 2023 stuff, it has not been as useful for me. More so his when he released all of his private lessons, and then a lot of the YouTube stuff that he already had out, like his what is it called, Scout Sniper series or something. Great stuff. But the stuff that he put out to his private group that he's released publicly now for free, that stuff is great. 2022 is great. 2023, it does feel a little more clunky for me, and it wasn't as super helpful. And once I had locked into what my trading plan and profitability is now that I've kind of just dialed in on that. But yeah, when you try to use all of his concepts and you try to incorporate everything that he's teaching and everything that he's throwing at you in every video that he puts out, you can just become deer in the headlights, paralyzed, and not know what to do and not know what you're looking at. And you're like, there's a fair value gap, there's an order block, there's a consequent encroachment, there's an OTE, there's a new week opening gap, there's the market maker sell model, there's the silver bullet, there's the time before price. Like, it can become so much. I mean, the guy is freaking brilliant. Like, he created an entire lexicon of trading terminology that did not exist, that now thousands and thousands of people use every day to how they think about their approach to the market. So brilliant mind, brilliant trader. But you just gotta you gotta look at what's best for you and do what's best for you. And I'm just, again, this whole stream is about taking one setup. It's all you need is one setup. You don't need 10 different setups. You don't need a super complicated trading plan to be profitable, to get funded, to get payouts. You need one setup, master one, and that's why I'm using this breaker pattern concept idea. You want to see a run on liquidity. You want to see displacement away. You want to identify where that run on liquidity started, find that last up or down close candle, and then see if the displacement after it broke that left behind a fair value gap inside of that. Use that as your entry. Target 1 to 2, low, easy hanging fruit. Go away for the day. If you remember in his 2022 mentorship, he talked about 5 handles a day. He kept saying 5 handles a day. 5 handles a day. That's all you need. 5 handles a day. We don't trade the futures contracts, but it's the same concept. 1 to 2. 1 to 2. And for me, that's like 14 pips a day, 14 to 20 pips a day, or a trade basically, because I don't find my setup every single day. But I'm risking usually between 7 and 10 pips on euro dollar, and I'm going for 1 to 2. So 14 to 20 pips is what I'm shooting for. And when I get it, I'm happy with that, and I can make a killing off of that. I don't need to capture the full day expansion. I don't need to capture a full week expansion. I don't even need to necessarily be perfectly in line with the overall daily bias. Now, I have a daily bias and I want to trade in line with my daily bias, but if I'm wrong, because oftentimes I can capture a 1 to 2 risk reward ratio on a trade that is a counter trend trade, and I thought it actually is a counter trend trade, I guess is what I should say. I wasn't intending it to be a counter trend trade, but it ends up being a counter trend trade, and I'm still profitable and I still hit my winner, even if my daily bias is wrong, because I don't need to hold for 1 to 3, 1 to 4, 1 to 6, 1 to 10, whatever it is. And all these people that are holding 1 to 4s, they're taking partials at 1 to 2 and 1 to 3, and then taking the rest off at 1 to 4. And in the end, I promise you, their overall risk reward ratio is right around 1 to 2. And so for me, I don't want to sit there and manage a trade and watch it and take partials. Just give me my full position at 1 to 2 and let me be done. Let me be done. I just want to reach up, grab the apple, and take it off the tree and go on about my day. I don't want to have to grab this apple and then and then reach up for one that's a little bit higher and then try to reach up for one that's a little bit higher than that. Just give me the one. I'm perfectly happy and content with that. That's all I need. Again, just not a lot happening. You're starting to see euro dollar push up high, or push into the highs here, the daily highs. Again, you have this buy side liquidity in your sights. You had on the 5-minute time frame here, you had a run on liquidity. So ran liquidity. We're getting an energetic displacement away. I would have preferred this move to happen right after it grabbed that. This move started up here. There's really no fair value gap inside that 5-minute candle. If you were going to target that buy side liquidity, you could use this candle here as a potential breaker. There's a fair value gap nested inside there. But it's not super clean for me. Again, I'm not thrilled with how that's moving. I would much rather see price come up, grab this liquidity, and displace away, and let us head a little bit lower here and take out Monday's low. That's really where my anticipation lies for today. So we'll watch and see if we get that. That would align with pound probably coming up into this into this order block here. Sorry, my brain wasn't working there for a second. Maverick says, any tips on how to stay calm when in trades? Do you set and forget, accept the negative outcome when placing trade? Thanks. I always seem to not let my trade run. Yes. Great question, and something I struggled with for a while. But yes, now it is when I take a trade and when I set an order, I've calculated my loss. I've calculated my risk percentage, and when I place limit orders, I'm accepting the risk that I'm putting on that trade, and I'm assuming that risk is going to be lost. So once I place a limit order, there's nothing else to do. The only thing left to do after my trade is entered is to move to break even. And I set an alert where my break even line will be, which is typically 1.5 or right there-ish around 1.5 R. I set an alert, and that's the only thing I have left to do is move to break even if price moves to my break even position. Other than that, you don't do anything. You don't watch. If watching bothers you, set your limit order and then turn off your computer. Set an alert if you get triggered so that you know, okay, now I'm triggered. I need to set where my break-even position is. And then just don't watch. You're either going to take the loss, which you calculated beforehand, what your loss would be on that trade. And it's an acceptable risk. And if you're risking too much and that's causing a burn on you, then you need to reduce your risk until it's at a comfortable level that you can manage that and it's not stressful for you. But once the trade is in, you do nothing. You do nothing. You don't move your stop. You don't manage it. You don't change your take profit. The only thing that you do after you're in your trade is move to break even at the appropriate time. So that's how I manage trades. I don't do anything. I just sit there. I will watch them sometimes, but a lot of times once I'm in, I just set alerts and then I'll come back to it. I watch them more now because I'm live streaming and I'm trying to capture screenshots when it hits things so that I can put it on Twitter to update those people that are following on Twitter and managing trades on Twitter with me. Besides that, I don't do anything. I don't do anything. The trade is either going to hit my stop loss. It's going to let me get to break even and then take me out at break even, or it's going to hit my take profit. 3 outcomes. That's it. 3 outcomes. I will lose the trade, I will win the trade, or I will be break even. That's it. And I don't know what's going to happen on any trade I take, but I know it's going to be one of those 3 things. I just don't know which one is going to be until one of those things happens. So that's the tip is you got to get comfortable with your trading plan. If your trading plan says you're going to take 1 to 2 risk reward, then every trade you need to let it play out. If your trading plan has an edge, if your strategy has an edge, if your risk management gives you an edge, you have to execute that plan exactly as written or you don't have an edge. And the edge is what makes you profitable. So you're not just going to randomly be profitable. Well, if you are, it's called luck. It's called luck if you are. And that's not a good business strategy. That's not a good business model. You cannot just rely on your intuition to consistently to help you reach profitability. It's never going to happen. So executing the plan. Set your orders, get in, then do nothing. I think for me, one of the struggles that I had was I wasn't even taking necessarily trades that were according to my trading plan. It was a setup that I saw somebody post on Twitter or on Discord or on Telegram, or it was just a gut feeling that I had about where the market was at. And I would just take a trade and I would set a stop loss, a take profit. And then as the trade started playing out one way or the other, I would be like, oh crap, well maybe I should just close it here because it's not going to go all the way up there. I didn't really do analysis right. So when you get into trades that aren't according to your plan, you're going to be way more tempted to cut and run, either because your stop loss, it's moving into your drawdown area and your stop loss, or it's bouncing around and take profit, but it's not really reaching your take profit, and so you're like, oh, I'm in profit, I should just take it. That's not a trading plan. So only take A+ setups that are according to your trading plan, and then let the trade play out. Trust your edge. It doesn't matter what happens. It's a completely random outcome on your next trade. But with probabilities, it's not a completely random outcome over the next 100 trades. Probabilities will play out. You don't know what the next one will be, but you know over the next 100, if you know your data and you know your strategy and you have the edge in your strategy, then you know over the next 100, the probabilities are going to play out. So that's how you have to manage and take those positions. That's what helped me. So not sure if that helped. Hey, Michael, good morning. Starting to think EU doesn't want to pull back more in the daily fair value gap as DXY has almost filled it already. Yeah, I did see that. The fair value gap here on DXY on the daily almost got all the way up there and pulled back. But it's pulled back up inside of it still here a little bit. I'm wondering if the dollar wants to run. It already ran this sell side here pretty aggressively, and it's pulling back. And so a strong dollar would mean a weak euro. I would prefer to see euro dollar run those highs, but if dollar, that would mean the dollar is going to need to make another run lower here on these lows. And not sure if that's going to happen or not. The daily fair value gap he's referencing here on euro is this one here. This big daily fair value gap here. And on the dollar, this orange block here is the fair value gap here on dollar that we're still inside of, but we almost filled in completely. So yeah, I don't know that we are going to come lower, but I don't know that we're going to come much lower there for. And basically what he's saying is the dollar could just start falling away from here, and that would push euro higher and not need to come back down into this area. Maverick says, thanks. That's what I've been doing. Just wanted to check once trade is active, is set alert on TradingView for TP1. Then I just do something else. I don't like watching the trade. It gives me anxiety. Yeah, I understand that. And I would try to break down why, Maverick, why that gives you anxiety. Where does that come from? You're going to learn a lot about yourself. And you're going to learn about the broken things inside of you through trading. We all have broken things inside of us. And trading brings those to the surface. And so if you have anxiety when you're watching a trade play out, why? Where does that come from? And it has nothing to do with trading. Has nothing to do with trading. Trading is just the circumstance in which that anxiety is being provoked inside of you, evoked inside of you. So you need to, I would be like, why do I feel this anxiety when I'm in this trade? Where is that coming from? What is that pointing to in me? There is a gauge inside of me that is in the red and it's going off. An alert is going off. My brain thinks I need to be protected from something. And why does it feel that? Is it does it have to do with, security, self-confidence? Does it have to do with money management? Does it have to do with, you know, something in your past that happened that creates fearful worry? But yeah, you gotta, I promise you, the anxiety that you have when you're watching a trade play out is not due to the trade. It's not due to trading. There's something else going on inside. That's the trading is just a trigger for that. So finding out what that is and working on that would be key. It says, I feel it comes from past failures and fears, feeling maybe I'm not worth the success. Low self-esteem and being overweight from childhood, still struggling. So this is why I'm working on these. Well, I mean, you're. I feel like you got a pretty good grasp on where it might be coming from. Um, our past failures and fears, man, our past failures, they do not define us. We've all made mistakes. We've all screwed up. We've all made bad choices. We've all been foolish. But that is not who we are. That does not define us. We are not what our mistakes tell us that we are. And there's a lot of people that probably want to make you feel like that, but it's not true. They're lies. Feeling maybe I'm not worth the success. Man, oh, geez, what just happened? Lost my monitor there for a second, so bear with me. Let me get that back up. There we go. Listen, you are worth success. Every one of us that's watching this is worthy of success. There's nothing that you've done in your life that defines you in such a way that says you cannot be successful. You cannot be great. You cannot do something great with your life. We were all designed and created to do something great with our lives. Every single one of us. We all have the choice on whether or not that's going to happen. We're going to have trials. We're going to suffer. We're going to go through hard times. And all of those things will either help refine us and help us grow and learn, or they're going to break us and push us down and beat us down. And but it's a choice of how you're going to respond to that. You being overweight, there's a lot of people that struggle with that. That can be overcome. That can be overcome. Your weight does not define you. How you think society looks at your weight and how you think other people are judging you because of your weight is probably a bigger issue than the weight itself. So don't, you are worthy of success. All right, we're coming into that 8:30 open here. I'm going to pop back over here, get off of that. We just had our news drop, the building permits, and it came in basically right as expected. It's a little bit lower than forecast, but higher than the previous, slightly lower than expected. So, you're seeing a little bit of a push down here on the dollar right now. I mean, on the euro, which means the dollar is pushing up a little bit higher, which, pound is dropping pretty aggressively down into its inefficiencies here. Euro dropping as well. If we drop down here to the 15-minute time frame, you can see we've run buy side liquidity here, and we've gapped down. So you've had this run of this old high on the 15-minute time frame, and you've had displacement away. So the question becomes, what down close candle would you use to identify if this 15-minute candle does in fact give us displacement below this low? Which is what I would want to see. I would not want to see it close bullish here. If we're going to get any kind of a trade opportunity, you would want to see this 15-minute candle, which we just opened, so we still have 13 minutes left. We would want to see this 15-minute definitely close below this low here. And then we would look back and go, where did this liquidity run? Where did it start? Started down here. These two 30-minute candles, if we drop down to a 5-minute, do we see something more clear? This run on liquidity started here or here, so you could use either this candle or these two. I would probably use these two because this is a swing low. This is the last swing low that happened before we ran liquidity. And so you potentially have something like this as your breaker. And you have potentially, some fair value gaps and obviously a big gap there in price. So we're going to watch and wait. That could be a setup forming here for us on euro dollar. But Maverick, getting back to what you were saying, man, you're worthy. You don't, so much of our self-confidence comes from how we think others view us and how others look at us. And we've got to judge ourselves against ourselves and not against other people's opinions of us. And you can judge yourself against yourself by keeping promises and making commitments to yourself and following through. And the more you do that for yourself, eventually other people will see that. But it doesn't matter whether they see it or not. You're going to see it, and you're going to know that you were honest to yourself, that you were true to yourself, that you did what you needed to do for you. But you got to stop believing those lies that you're not worth success. Alternatively, this could be a run on sell side liquidity here that pushes us higher. So we're just going to watch and wait and see what the market decides it wants to reveal to us about a direction. But we're going to let this 15-minute candle play out before we do make any decisions here. You can see the sell side liquidity getting run, and then you're getting pullback here within the first couple minutes of that 15-minute candle. The news dropped and then pushed us lower, left a gap. Pound left a little gap, and dollar left a little gap as well. Oh boy, got the yawns. Sorry about that. Appreciate you guys watching today. If you're finding any value here, again, I would appreciate it if you push that like button. And feel free to share this on Twitter as well. Any value you get, I want to help as many people as I can. I'm doing this for free. I don't charge anything. My DMs are open on Twitter. You can message me there. A lot of people, I'm getting several different conversations going every day with different traders that are coming in and asking for help. And I love talking to you guys. So definitely take advantage of that if you haven't. The social media following is not huge right now. We're only 30 days in, and it's still at a place where I can get to everyone and give everyone my attention and my advice. And I imagine as more receipts are shown and more validity and credibility is shown here on the stream over the next coming weeks and months, and that funded account and the stacking of accounts keeps growing, more and more people will want to be like, oh, what's going on over there? I feel like most people will watch this stream and they'll come in and they'll be like, oh, nothing's happening. And they don't realize that this is how professional traders trade. They don't take trades every day. They wait and they watch for their A+ setup to form and then they strike. They're not taking, if you're taking multiple trades every single trading day, and you're taking the amount of trades that profitable traders in 1 week that profitable traders take in an entire month, there's a reason why you're not profitable. Oops, don't want that up. You can see here, getting some continuation pushback here on the 5 minute. Nice little fair value gap there. If this does indeed give us an opportunity to get involved short, I would probably be looking at that, seeing something rebalance here on that. In my 1 to 2 would be just below before on that sell side liquidity there. Again, I'm not saying this is a trade. I'm just saying if this does continue to play out, I'm going to wait for this 15-minute candle to close before I decide to do anything. But this is indeed currently producing a valid setup. We've had a run on liquidity, an aggressive move up into liquidity, and then we've had an aggressive move quickly away from liquidity being drawn. This would be my A+ setup that if I only had one opportunity to trade for the rest of my life, this is what it would be. A run on liquidity, displacement, breaker, a fair value gap. It's setting up that way. We'll see if it actually is going to let it play out, and we'll see if we get any kind of entry there to take advantage of that. But we still have another 7 minutes or so before this 15-minute candle closes, and then we'll see what happens. If it takes out sell side liquidity before it gives an entry, we don't have a trade. But so far, looking good. So far, looking good. Just in case things start happening here, I'm going to get my MT5 terminal open here and set up. So bear with me as I lean over to this other side of my desk. Yeah. All right. We got some stuff set up there. Got the copy trader on. Everything's working. So if we get a setup here, I'll let you know. But we're just going to watch and wait now. There's nothing else to do. We still have about 5 more minutes before this 15-minute candle closes, and it is displaced lower here below this low. It has left a nice little gap. So we'll see. We'll see what happens. Again, as long as we don't get a massive displacement back up, as long as this candle, again, I want to see a close below these lows. It's really what I want to see. And then you've got a small fair value gap between the low of that candle and the high of this candle. With that volume imbalance there, we would target that volume imbalance as an entry. Put our stop above that high. It ran liquidity. It should not need to come back above that area. And our target is 1 to 2, which is also correlating with the relative equal lows and sell side liquidity below us. So, we'll see what happens. Alex says gold has a nice setup. Does it? Does it now? Let's check it out. 15-minute time frame. Run liquidity. Potentially, yeah. Potentially. Run on liquidity here. You could use this as a run on liquidity for sure, but I would this is the obvious run on liquidity here on the 15-minute time frame. Got to push down, aggressive push up. And we didn't get an energetic move right away, but we have had displacement since then, so you could either use this one or these two candles. You do have a fair value gap there as well. On the 5-minute, you can see we ran liquidity here. We've displaced away. Here is your... The only thing about this one is that your volume imbalance up here is so far above your breaker blocks here. But it could work out. All right, got about 2.5 minutes left here. If this candle closes exactly the way it is, I'm going to have a sell limit order. I will call it out here and let you know exactly where we're going if it does indeed close in the next couple minutes, if we don't get a big pushback here. Got about another 1.5 minutes. And we're just being patient, just waiting. We're in no rush. This is our setup. This is what we like to see. We like to see a run on liquidity. We like to see displacement away. We like to see a clear breaker and a fair value gap inside. This is definitely fitting our profile. We do have a 15-minute change of structure. And so this is what we're going to be looking at. Got a minute left, and again, I just want to make sure it closes below the swing low before I do anything. When we have about 30 seconds left, I'll go ahead and let this go. All right, I'm going to go ahead and call this as a valid trade setup here for me. I'm going to, oops, oh, let me get that going. Sell limit there. Dang it. Put that stop up there. I'm going to put my entry there. And all right. There we go. All right, so my order is set at 09276. And my stop loss is 09360, and my take profit is 09097. And there it is. Let me go ahead and copy that over. And I'm going to put this on Twitter quickly here. And I'm going to call that out again. Entry is, oops, let me make that a sell limit. $1.09276. My stop loss is 8.5 pips, and it is 09360. And my TP is set at 09097. And there we go. If price runs sell side liquidity here, we will cancel this order. So we'll just have to watch and wait and see if we get any opportunity here to participate in this trade. That's what we're watching and waiting. So we've got a sell limit order on euro dollar. You can see up on my screen exactly where I have everything posted. I'm going to go over here. Actually, what was that? That was 0.33. I'm managing another account as well that's not connected to this specific stream. Give me just 1 second, guys. Here, I'm still managing a couple other things over here on my MT5. I have a couple of accounts that I cannot set up a trade copier on, and so I need to all right, we'll see. We'll see what happens here. It looks like it's going to run pretty aggressively towards that sell side liquidity and may not give us an entry here. May not give us an opportunity to participate. And that's perfectly fine. But that is a valid setup. When I say sell side liquidity, I want to see it run yesterday's low. If it doesn't run yesterday's low first, that's where I will invalidate this trade. If it runs these and takes these first, I'm not opposed to that. This is the yesterday's low. Monday's low is the liquidity I'm most interested in it taking. So we'll see what kind of participation we get. Before the dollar fills in this fair value gap or reaches that inverted fair value gap, I'd like to see a pullback here. But it may just run. It may just run. You can see gold's just running. This is what happened last week, where every time we got an opportunity, price exploded away with no pullbacks, no entry opportunities given. Could very well likely happen again today, and it doesn't bother me. I mean, I'm not in a rush. I'm not in any kind of a hurry to get this stuff done. So it's fine if it doesn't give us any kind of pullback here. Corey asked, so how would the trade copier work with different sized accounts? So I set up the trade copier to it multiplies the lot size that it's given. So based on the account size, so I have a 10K as my master trading account, right? So I pulled this up on a couple of other streams, Corey. I can do it with this trade here. I'm going to leave this up on the screen right now, but so if it sends in, let's say I have a 100K account, and at some point I will have a 100K account connected to this trade copier. The 10K account, let's say it's sending over, this lot size is 2.3, I think. I will buy a new one with whatever payout I have, Michael. Every payout I'm going to buy new challenges every time I get a payout. So whether the challenge is completed or not, if I'm at 6% or 5% or 3%, whatever it is, I'm going to keep buying and stacking challenges. But go back to the lot size. So if my 10K account sends over a lot size of 2.3, and I have a 100K account trade copier to it, I will have a lot size multiplier for the 100K account that 10x's that lot size. So on a 10K account, if I'm doing 2.3 lots, on a 100K account, that would be 23 lots, right? 2.3 times 10, whatever that is, 23 point something. It has a lot multiplier on there. So I'll use that lot multiplier on the trade copier. So whatever the account size is, that's the lot size multiplier I will use when it gets a trade from this 10K master account. I don't know which one I did. I can maybe pull it up here. Let me see if I can get to it while we're watching. Wow. Log in here. It's really not that big of a deal. I can pull it up here. So here's my social trader tools dashboard back here. You can see the two accounts I have connected, the 10K live funded, the 10K phase one. If I go into my trade copier, it's currently on, and you can see on the settings here, I'm copying from my live funded account. I'm sending it to my 10K phase one, and it's on. My risk settings are this. So I'm not reverse trading myself. I'm not taking the opposite position trade there. My risk type is lot multiplier. I could have this set to a fixed lot. I could have it set by equity or by balance, but I have it by lot size. So on a 10K account, I'm copying to currently a 10K account. So the multiplier is 1, which means it copies it 1 for 1 into the new 10K account because they're the same size. But if it was copying to a 100K account, then the multiplier would be 10x. It would be times 10. And then I can leave slippage in there, and I can have my max lot size and all that. That doesn't really matter, but that's how I would manage a larger account connected to this trade copier, is with that lot multiplier. So that's it. I'm using Social Trader Tools. It's great. It's easy. It's good to go. All right, my doggies are coming downstairs to do their business, guys. So let me let them out here real quick and let them do their thing, and then I'll be right back. All right, we're back. All right, starting to get a nice little pullback here. We'll see if we can, if it'll reach up to our entry. I'm going to stay on for about another, I don't know, 10, 15 minutes. And then I'm going to go about my day. All right, here the 9 o'clock hour has opened. So hopefully, what I would like to see is an open and then a high to come up and trigger us in, and then a low to take out the sell side liquidity. Again, if it hits the bottom of this box down here and takes out yesterday's low, I will need to cancel this order. But I'm hopeful that we can get a push up in the first 15-20 minutes, and then the last half hour see that fall away. Dollar leaving behind a fair value gap here on the 15-minute. Again, I don't want to see, if the dollar's coming up here, that means our trade's probably going to get invalidated before we get an entry. I would prefer to see dollar pull back into this fair value gap before it takes out those highs, but we'll watch and wait. I'm kind of anticipating overall the high of the week being in here today or tomorrow. All right, it's taken out the closest sell side liquidity here. It still has yesterday's low in place, and that's the one I'm most interested in currently. And I open the door, breathe natural outside air, and immediately start coughing. Allergies, man. Suck. Oh, I've got some text messages here. Who's texting me? Not much to do now except sit and wait and see if price comes back to our entry level. We're just killing time, really. Not much to see or do. Oh man, that makes me kind of sad, Michael. I've always kind of had this idyllic image of Europe having perfect clean air that would not mess with my allergies. So doesn't appear to. It appears they're worldwide, sadly. And I don't remember really having allergies as a kid or as a young adult, even. But like in the last decade, I feel like they have become an issue. Pound dropping hard, dollar dropping hard, gold running away. It's kind of frustrating when you see that, but it's not like we missed a move. The market is infinite. It's not going anywhere. It's going to be back tomorrow. I didn't miss anything. Uh, and you can see there it has, let's see, did it take out that low? I think it did. The low here was 09066, and the low here 09601. So yeah, it did half a pip, took out that sell side liquidity. So we are going to cancel that order. We are not going to get into a trade off of that setup today. So I'm going to delete that. I'll leave that in there just to see. Price will probably come back up here. I'll be interested to see what kind of response it gets, but there's no trade set up for me today. Based on my trading plan, when the opposing liquidity gets run without giving me an entry, I cancel that order. So I'm going to turn that off, delete that, and delete that. And then let me make sure when I delete an order, it also deletes it. It did. Good. Okay. All right, well, I'm going to call it right there, guys. We did get our setup today. We unfortunately did not get a pullback to give us an entry to participate in that. It pulled back slightly, just not deep enough for us to take advantage of that. So that's how it goes with trading. So we will be back at it again tomorrow morning at 7 a.m. New York time. And we'll see if we get another chance. But until then, stay safe. Enjoy the rest of your days. Happy hunting. And I'll catch you guys tomorrow.